Hello and welcome to the 1 Minute Market here at Ready Set Crypto for Friday, the 30th of August. I've just spent the last week moving about 500 miles south, so it's been a while since I've done a 1 minute market. So today's 1 minute market is going to be a little bit longer than 1 minute. So for those of you that are engineers out there, put away your stopwatches. All right, in today's video, I want to cover three different things. So number one, why did this downdraft start to begin with? Why are we in correction right now? Number two, where is support likely to be found with this correction? And then number three, we can't trade the market that we want, only the one that we have. So what do we do to be able to obtain value from this correction? How can we trade this instead of just sitting on the sideline? Let's get into it.
It seems like just last week, Bitcoin was heading higher. What happened? Well, when everyone sees the same thing and everyone gets too confident, they tend to lever up in position size. All of the chart experts were talking at length about the symmetrical triangle and saying how that upside potential of this was basically the distance of the open end of the triangle. So everybody was talking about, okay, this is going to be a break from 11,000 up to 16,000 or whatever number they were talking about. I wasn't really listening that much. They don't consider that the price might actually go in the opposite direction. Because of this, I warned our Omnia subscribers early this week that no one was expecting a downside move, which was increasing the chances of it actually happening. So when it does, they panic and they become their own worst enemy, hitting the eject button and moving the price against themselves with market orders. On Wednesday, we saw this event happen in just minutes. This was slaughter as the price came down hundreds of points in about half an hour. Everyone that had leveraged up expecting the next breakout instantly got wrecked through liquidations. This is a terrible way to do risk management through liquidation price. Now, on a day-to-day basis, yeah, we do get the normal forces of supply and demand where you see candles, slightly moving up. This is demand outstripping supply and forcing the price to move up, but it doesn't move that violently. Or if supply outpaces demand, it forces the price down, and we'll see slight moves like this, but not big ones. That's something different. The big moves are due to the majority getting spanked and panicking their way out of their positions, which moves the price in a very violent manner. And this I attribute to the majority all getting their information from the same sources and therefore becoming overconfident and panicking when things didn't turn out the way everybody was predicting. So that's part one, what happened. Now we get to part two is, okay, where might this correction stop? Where's the pullback going to go down to? Well, seriously, we don't try to predict the future. We have no ability to understand what's going to happen tomorrow, but we can identify some levels that might just be some support levels that the market will find attractive from a demand perspective. I typically do not use lagging indicators to determine support levels, such as moving averages or oscillators or momentum studies or anything like that. If you're looking for an answer, why not go right to the source? These types of studies look great in the rearview mirror, but are seldom helpful real time. Price is king. There's no delay, and it instantaneously tells us how the chart is responding to supply and demand. Why not go right to the source instead of trying to translate it through a lagging study? I'll use fibs and fib confluence, horizontal price levels, and volume profile. So let's go to the live chart and combine these techniques together. Here's just the price and volume chart of Bitcoin on the Bitstamp exchange. It doesn't matter which one we use. We could use BitMEX, we could use Coinbase. Really doesn't matter. They're all about the same. So right now, just price and volume. There's a couple of trend lines on here. Let's not allow those to confuse the issue. What we want to start with here is just support and resistance from a horizontal price level. And I see a couple of levels on here, and that's just because I've been doing this for a while. So if I go out to the weekly chart, I can start to see like what is support and resistance here on the weekly chart that I can transcribe over to the daily chart. And where I would place this is around the 9100 level. So if we just throw out a line that's going to be somewhere around in this area here. And let's give this a different color, like this hot pink here, so it kind of stands out, and we'll just keep that on there. But right now you can see how the price, former resistance, couldn't get above there, and then boom, it breaks through, becomes new support. Former resistance becomes new support. And so 9,100, until that is broken, is going to be considered a support level. So that's part of the framework that we're going to add to this. Now let's go over to the fibs. Let's have a little bit of fun with those. We're going to go over to the fib retracements, and we're going to start this, and this is very subjective. I'm sure some people will disagree, but basically what I do is I like to start the swing, and this is going to be the major weekly swing from really where things got kicked off here, and that is right around the beginning of April or so. And we're going to drag that all the way up here to this level here at almost 14,000. And so what we can see here is that we have retracement levels, 23.6, 38.2, 50%, 61.8, and beyond that, I really don't care, because if it gets by 61.8% of this is typically where we fill in the triangle. In other words, it goes all the way down to 0 again. Now, what I will also do is look for fib confluence. Let's start by going to the last swing and starting out here. So this is from the very last swing that we had to the upside. So this is where we're going to overlay those on top of each other like this. And you can see where we have some levels where we have confluence. So in other words, the 38.2 of the shorter term lines up with the 23.6 of the longer term. We have the 61.8% of the shorter term lines up with the 38.2 of the longer term. And unfortunately, the shorter term is all the way through 61.8, which means that the probabilities have increased for this to fill in the triangle and go all the way back down to about 7,500 again. So we'll keep that in mind as a data point. And lastly, what I want to do is I want to add what's called volume profile. Now, volume profile, all it shows is within the span of this trading range here, which goes back to really the end of 2017 or 2018, that how much trading, how much volume actually occurred per price level. And the reason that this is important is because what you'll find is that there's rarely any support that comes from these types of moves. So these types of moves where it's just a one-way beeline rarely creates any kind of support or resistance. However, when the price coils and oscillates around a level like this, you get a tremendous high volume node from something like this. So this does represent support, and this is right around the $8,000 level on BTC. What you also find with volume profile is the price tends to get attracted to these nodes from time to time. So they will bypass the areas of very low volume, which is like this area that I talked about before. There's essentially no support down here. So once it gets by 9,100, there's nothing until it gets to 8,000. So let's put this all together. The first level of support that we expect to see reaction at is 9,100. Although this is going to be the 1, 2, third time down. So there is such a thing as a triple bottom, but there's no such thing as a quadruple bottom that I've heard of. So we may get down to this level, we may not. The next level past that would be 8,000. And if we're getting to that point, then we've got a little bit of an issue, because this is a weekly lower high, and this would then be a weekly lower low. We now have a weekly downtrend, which is a continuation of the daily downtrend, which has already kicked in quite some time ago, back in July. Remember, rule number 2 of price action is that reversals start from the inside out and they propagate higher. We already had a reversal at the daily chart, and if it undercuts 9,100, then it starts to transition into a weekly downtrend, which is, let's just say that's interesting. However, the next level of support down here is about 8,000. In the grander scheme of things, let's pull back in the grander scheme of things for a second here. A weekly pullback down to 8,000 is not necessarily the end of the world. but it is going to put a lot of pressure on things. And I would say that this 6,000, 6,500 level has got to hold up as support, but we're probably talking about weeks and weeks away if anything like that were to happen. So for right now, first level of support 9,100, second level of support 8,000. That should get us through the next few weeks of analysis. Now let's see what we can do with that. Like I said at the beginning of this video, we can't trade the market that we want, only the one that's in front of us. There's no point in getting frustrated at the market. We can't change that. All we can do is to look at what we have and try to take advantage of it. So the final point for this video is, what can we do with this correction? Now, if you are a hodler, weren't you just complaining about not getting a pullback? Well, here you go. If you're using dollar cost averaging through time-based or signal-based entries, that's still fine in this market. The good entries that you'll see over time rarely feel good to take. So this certainly qualifies as an entry that doesn't feel very good. Secondly, if you follow crypto options, and oh, by the way, I just finished my course, these are really, really good conditions for selling put options into a pullback. This is what we're supposed to be doing. Selling put options into a pullback like this maximizes your ability to sell for more distance or for a larger credit for income. There is no replacement for displacement. Lastly, you can become totally agnostic about the market's direction and just use this volatility in either direction. And oh, by the way, there's a better instrument than trying to either go long or short the spot currency. 2019 has seen an explosion of vendors offering futures, these are really the perfect directional instrument. Looking at this is at what I call a triple fractal array, where we have the 25x time frame over here, which is a 5-hour chart. We have a 5x time frame here. We're using this like a family of time frames. And then the 1x or signal chart, this is the anchor chart over here. This is our signal chart here. We're taking entries off of the signal chart and we're taking them in the direction of the anchor chart swing. So in this case, we want to be going long. We're looking for long entries. There's the signal, boom. Here's our hook entry going long in the direction of the momentum. Now, stepping back from this one, it looks like yet another bear flag. So ultimately this one will probably end up in a lower high, roll over, and there will be the next entry as we go red and trade in the direction to the downside of the anchor chart swing as we get the hook signal here. So this is just one strategy that we cover. You can also trade futures on a single time frame if you find this to be a little overkill, but I actually enjoy using multiple time frames for this. It makes it much more accurate. If you're a long only investor, so that means if you just know how to buy low, sell high, you're going to be forcing it in the near term as the price goes against you. You're going to be trading counter trend. So step back, recalibrate your efforts, and seek the proper tools for a balanced approach to this market. As I say goodbye here, watch for our updates from Bali as Mav and I attend next week's Altcoin Magazine Mastermind event. See you guys in the next video. Take care.